Starting with nothing can feel like starting the race miles behind everyone else. When people talk about wealth, the stories often highlight individuals who already had advantages. Access to capital, supportive networks, expensive education, or families who understood investing. It can create the impression that building wealth is only possible for those who begin with a head start. But history repeatedly shows something different. Many people who eventually built financial independence started with very little. Some started with debt. Others started in unstable environments where money was always a source of stress. What separated them from everyone else was not luck alone. It was a shift in how they approached money, opportunity, and time. Building wealth from nothing does not happen through one dramatic breakthrough. It happens through a series of small decisions that slowly change the direction of a financial life. The first step is understanding what wealth actually means. Most people imagine wealth as a large amount of money sitting in a bank account. But real wealth is not defined by cash alone. Wealth is the ability to control your financial future. It is having assets that generate value, opportunities that continue growing, and systems that work even when you are not actively trading time for money. Once that definition becomes clear, the path forward becomes easier to understand. Because the journey from broke to financially stable rarely begins with investing. Skills are the first form of capital that anyone can build without money. A skill that solves valuable problems in the market can generate income even when financial resources are limited. This is why many people who start broke focus intensely on learning. They develop abilities that the market values. Writing, design, software development, marketing, sales engineering, technical services, consulting, construction, healthcare, or countless other fields. The specific skill matters less than its usefulness. The more valuable a skill becomes, the more opportunities appear, and opportunities lead to income. At the beginning, income may still come from traditional employment or freelance work. That stage is important because it creates the first building blocks of financial stability. When someone has lived without money for a long time, the first priority is not investing. It is stability. Stability means having control over basic expenses, avoiding destructive debt, and creating a small financial cushion that protects against emergencies. Without stability, every unexpected problem becomes a crisis. A broken appliance, medical expense, or sudden job loss can destroy progress overnight. This is why many financially successful people emphasize the importance of building an emergency buffer before pursuing aggressive investment strategies. It creates breathing room, and breathing room allows better decisions. Once basic stability exists, the next stage begins: saving. Saving money may not sound exciting, but it plays a critical role in the journey from broke to wealthy. Saving represents discipline. It proves that income can be controlled rather than consumed immediately. Many people remain trapped financially because every dollar they earn disappears as soon as it arrives. Expenses expand to match income, leaving nothing behind to build the future. Breaking that pattern is essential. Even small savings create momentum. The amount may seem insignificant at first, but the habit itself changes how money is handled. Each saved dollar becomes a potential seed for future growth. But saving alone does not create wealth. Saving is preparation for the next stage: investing. Investing is where money begins working instead of sitting still. This is one of the most important transitions in the entire wealth-building process. When money remains idle, it does not grow significantly. But when money is invested into productive assets, it can expand over time. Assets can take many forms. Stocks represent ownership in companies. Businesses create products or services that generate profits. Real estate provides rental income or long-term appreciation. Funds and diversified portfolios spread investments across multiple opportunities. The common theme behind all these assets is growth. They participate in the expansion of the economy. And as they grow, the value of the investment increases. For someone starting with limited resources, investing may begin with small amounts. But the size of the initial investment matters far less than the consistency of the habit. Consistent investing allows compounding to begin. Compounding is one of the most powerful forces in finance. It occurs when returns generate additional returns over time. At first, the growth appears slow. The early years may not look impressive, but as time continues, the effects become dramatic. Growth accelerates because each new return builds on previous returns. Many people underestimate how powerful this process can become over decades. Someone who invests small amounts consistently for many years often accumulates far more wealth than someone who invests large amounts only occasionally. Time magnifies discipline. Another key element of building wealth from nothing is avoiding destructive financial traps. Certain behaviors quietly prevent people from ever accumulating assets. Lifestyle inflation is one of the most common traps. When income increases, spending increases automatically. A raise leads to new expenses, better gadgets, more subscriptions, larger homes, and more expensive lifestyles. Before long, the additional income disappears. There is no progress. People who successfully build wealth usually resist this pattern. When their income grows, they increase investments and savings instead of expanding lifestyle immediately. This decision allows wealth to accumulate. Another trap is high-interest debt. Debt used for education or strategic investments can sometimes be useful. But consumer debt that carries extremely high interest rates often destroys financial progress. When someone pays large amounts of interest every month, money flows away instead of building assets. Escaping that cycle requires discipline and long-term thinking. Now here is something that many people starting from nothing eventually realize: income from work alone rarely creates substantial wealth. Work provides stability and cash flow, but wealth is usually built through ownership. Ownership means holding assets that generate income or grow in value over time. This is why entrepreneurs, investors, and creators often build wealth faster than individuals who rely entirely on salaries. Their systems allow money to scale. A product can be sold thousands of times. A business can expand into new markets. Investments can grow continuously. These opportunities create exponential growth instead of linear growth. But entrepreneurship is not the only path. Investing in businesses through the stock market also represents ownership. It allows individuals to participate in economic growth. The modern world celebrates instant success stories. Social media highlights overnight breakthroughs and rapid fortunes. But the reality behind most wealth is far less dramatic. It is built slowly, often quietly. Year after year of disciplined decisions gradually transforms financial circumstances. The person who invests consistently for 20 years will almost always outperform the person who chases short-term opportunities for 20 years. Patience creates stability, and stability creates growth. Another overlooked element in the journey from broke to wealthy is mindset. People who grow up without money sometimes develop limiting beliefs about wealth. They may believe that financial success is reserved for others, or that opportunities are always out of reach. But mindset shapes behavior. Those who believe wealth is impossible rarely pursue the habits required to achieve it. Those who believe progress is possible begin experimenting, learning, and taking calculated risks. Over time, those actions create real results. This does not mean ignoring reality. Economic inequality, structural challenges, and unexpected obstacles are real. But history is full of individuals who overcame difficult starting conditions by focusing on what they could control: skills, discipline, consistency, learning, and long-term thinking. Now imagine someone who begins with nothing but commits to improving their skills, increasing income, controlling expenses, investing consistently, and building assets. The first year might not look dramatic, neither might the second. But over 10 or 20 years, the transformation can be remarkable. What started as a small savings account becomes an investment portfolio. What started as a job becomes a career with higher earning potential. What started as a single income stream evolves into multiple streams through investments or small ventures. Gradually, financial stress decreases, choices increase. This is how wealth is built even when the starting point is zero. Not through one perfect decision, but through thousands of small decisions made consistently over time. Every dollar invested instead of wasted. Every skill developed instead of ignored. Every opportunity explored instead of dismissed. Each decision becomes a small step away from financial struggle and toward financial independence. And eventually those steps add up to a journey that once seemed impossible. Because the truth about wealth is not that it requires a perfect starting point. The truth is that it requires a long-term commitment to growth. And that commitment can begin even when someone starts completely broke.